Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ENERPAC Tool Group CORP quarterly report. ENERPAC Tool Group Corp offers a diverse range of products and services across various industries. The company's portfolio includes branded hydraulic and mechanical tools, high-force hydraulic and mechanical tools, cylinders, pumps, valves, bolt tensioners, specialty tools and miscellaneous products, maintenance and manpower services, tool rentals, heavy lifting technology solutions. The company markets its products under several brands, including ENERPAC, HYDRATIGHT, LARZEP, DTA, The Smart Move, and Simplex. Its services cater to various sectors such as infrastructure, industrial maintenance, oil and gas, mining, civil construction, and alternative energy. ENERPAC Tool Group Corp's stock price drop. A year of disappointment. The past year has been a challenging one for ENERPAC Tool Group Corp, EPAC, as its stock price dropped by approximately 16.92% according to MarketBeat and minus 12.5% according to investing.com. The decline can be attributed to several factors, including disappointing financial results for the first quarter of fiscal year 2026. Specifically, the company missed analysts' expectations for revenue, earnings per share, EPS, and adjusted EPS. The CONE FY 2026 results showed a decrease in revenue from $145.2 million in the prior year to $144.2 million, falling short of the anticipated $146.45 million. Earnings per share also fell to $0.36, missing the consensus estimate of $0.37. These underperformances triggered investor unease and contributed to the stock price drop. Broader market trends and regional disparities also played a role in the sell-off. While the Americas saw a 5% organic growth, the EMEA and APAC regions contracted by 10% and 8% respectively due to macroeconomic headwinds in Europe and China. This decline highlighted ENERPAC's reliance on volatile service segments and regional imbalances. The company's management reaffirmed its full-year FY 2026 guidance, but it may take time for investors to regain confidence in the stock. The primary drivers of revenue growth or decline are multifaceted and influenced by various internal and external factors. On one hand, revenue growth can be attributed to strategic acquisitions, such as the purchase of DTA for $26.7 million plus potential earnout of €12 million. Additionally, organic product sales growth of 5% over the prior year quarter and a 7% year-over-year increase in product sales demonstrate a positive trend. On the other hand, revenue decline is driven by several factors, including supply chain issues, decreased demand from customers in the oil and gas industry, logistics challenges, and failure to collect accounts receivable. Furthermore, organic sales decline of approximately 2% in the quarter and organic service sales decline of 26% indicate a significant drop in revenue. The impact of external factors such as currency exchange rate fluctuations, regulatory and legal developments, unfavorable tax law changes, global economic recession, and elevated interest rates and material cost increases also contribute to revenue growth or decline. Overall, the company's revenue is influenced by a complex interplay of internal and external drivers that require careful management to achieve sustained growth. Net income and profit margins decline. The company's net income has experienced a significant decline, decreasing by $2,592,000 or 12%. From $21,723,000 to $19,131,000. This reduction in net income is accompanied by a decrease in profit margins. Gross profit margin has dropped from 51.4% to 50.7%, while operating profit margin has decreased from 21% to 18%. These declines indicate that the company's ability to generate profits from sales and operations has been compromised, contributing to the overall decline in net income. The company's financial performance indicates a strong ability to generate positive operating cash flow. The 3 months ended November 30, 2025, saw a significant increase in cash provided by operating activities, totaling $15,976. This trend is consistent with the overall net cash provided by operating activities of $16 million, demonstrating a stable and healthy financial position for the company. The company's debt level has undergone a slight change between 2024 and 2025. While the current maturities of long-term debt have increased by $1,250, the overall long-term debt has decreased by $2,458. This reduction in total debt is likely to result in lower interest expenses, as financing costs have decreased due to lower debt balances and interest rates. The IT&S segment outperformed the other segment in 2025 in a mixed financial summary for 2025. Two segments of the company stood out. The IT&S segment showed improvement across several key metrics. Net sales remained relatively stable, increasing by only $3 million from 2024 to 2025. However, gross profit decreased by nearly $3 million during the same period. Operating expenses also saw a slight decrease. In contrast, the other segment struggled in 2025. Despite an increase in net sales of over $1 million, its performance remains unclear due to low sales and expenses. Management is emphasizing organic growth through core business execution, margin expansion, and customer-driven innovation. Key strategies include entering emerging markets like Asia-Pacific and focusing on verticals driven by long-term macro trends. Cash flow generation is crucial to achieving financial and strategic objectives. The company aims to optimize expenses and expand its digital ecosystem for sustained growth. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, totaling $2,119 in 2025 and $2,167 in 2024. Additionally, the company has also invested in buying back shares, with totals reaching $14,899 in 2025 and $4,379 in 2024. That concludes the financial summary for ENERPAC Tool Group CORP. Feel free to comment below, and I will be happy to answer them when possible.